Welcome back to Trading Hour. We're looking at markets which are largely okay, though, of course, it's not a big one-way move that's building, at least not so far into the morning. So how do you position yourself, or how do you approach a market like this that's trying to find some stability after what's been a long correction? Devang Mehta is joining in. He's from Spark Private Wealth. Devang, 5 months. Indian investors are not used to seeing corrections that last for 5 months, right? Time and price. It's not been easy. First of all, is this, what are you advising? What are you doing? Is this the time to nibble in? And if yes, where?
Surabhi, thanks for having me on the show. I think, yes, it's been the last 5 months has sort of been difficult in the journeys of first-time investors, if I can say that. But people who have seen the cycle, maybe a couple of cycles, 3 cycles, or even more, know that this type of corrections happen in the bull market. This was a sharp correction. Rather than sharp, it was also a correction which was very meaningful. Which corrected the indices by 15, 20, 25% respectively, large, mid and small. But the stocks have corrected 40, 50, 60%. Honestly, if I can just attribute some things to the market, I know a lot of reams of paper have gone into why these markets have corrected, and I'll not go into that. But having said that, there are so many positives which the markets have ignored. Right from a positive budget to a decent type of earnings season, not so bad in terms of RBI infusing liquidity time and again, Delhi elections being won by the ruling party in the center. I think most of this have been events where this were a 300, 500 point cheer on the Nifty. But yes, because of the sentiment, what sentiment can do to markets and what also flows or absence of flows can do. I think that 2.5, 3 lakh crore being sold in the last 4-5 months has also had their toll on the market. Now, coming back to what should one do, and I think most important is an action point, whether the client should sort of revisit the portfolio, people who have not invested, what should they do? I think point number 1 is that very clearly, if you look at the portfolios, I think it's time to revisit or sharpen the portfolio. If probably you missed out on great companies or good companies, and you have some gruesome companies in the portfolio, I know it will sound philosophical, but there are a lot of companies, I think everything and anything did well over the last 3-4 years. And now it will be time to probably sharpen the saw and do some smart sort of stock picking because everything would not do well. So now you have to follow earnings, you have to follow cash flows, you have to follow management commentaries. Probably would sectors change? I have my doubts. There will be certain sectors which will still come back to the fore after a huge bit of a price correction and valuation correction that has gone through. I think time for a lot of existing investors that just revisit your portfolios, look at whether the earnings have flowed. We are doing the same thing. I think our portfolio companies have grown very well. There would be a double whammy if the markets also fall and our companies don't deliver on numbers. It's a different point that the markets correct and your stocks correct along with that. But otherwise, I think most of the earnings that we have seen for our portfolio set of companies have been good. Yes, so the short answer is yes, one needs to nibble into this. These are opportunities which can create compounded annual returns rather than only returns.
Devang, I'm putting you in a tough spot here, but I remember in last year you had said Trent was one of your top holdings. Is that correct? At some point of time, was Trent one of your top holdings in your portfolio?
So I think our portfolio was more to do with, absolutely right, our portfolio was more to do with capex-oriented businesses, a lot of capital good ancillaries, power automation stocks like Hitachi Energy, you would recall, and Trent was also a meaningful part of the portfolio, and it still remains.
And what have you done with Trent, given the kind of correction that we've seen in the stock price?
Entire market right now is collapsing in terms of where there were high P ratios. The so-called expensive valuations are now cracking. But most importantly, if you are confident on the numbers that the company will deliver, yes, there may be a couple of quarters which can probably have a miss in the life of this company. But if somebody has a horizon of 3 to 5 years, I clearly feel that the organized retail, there are very less candidates, right? So you probably have a scarcity premium in a few of these businesses. There'll be a couple of other businesses which are listed, but not as the class which Trend would probably command in terms of earnings and cash flows and valuations. So my sense, yes, valuations can there be a 5% correction more on this type of businesses? It can be. But would you be able to price to perfection? Answer is no. I think these are companies which one should probably, if they are not owning, they should start to own as well.
And in the course of the last couple of months, as the stock was correcting, did you add to your position?
Yes.
Or did you reduce your, you've been adding to Trend? Okay. Got that. Any other changes that you made in your portfolio? I know we've spoken about power, the stocks like Hitachi, etc. But what are the key changes that you've made in your portfolio? Because this correction has provided an opportunity.
I think, yes, most importantly, we are looking at certain businesses in the discretionary consumption space as well. So I think I've spoken about that in the past as well. Some hotel businesses, organized retail, as I said. A lot of such businesses which you had sort of always missed out because there was no correction over there. Also, certain businesses in the financial services. Now, again, I'm not talking about the traditional banks or the traditional NBFCs, but most importantly, the broking houses, the wealth management houses, the AMCs, depositories, exchanges. We have seen a great correction over here also. I think this is one segment which we are nibbling into and which are looking at very, very positively.
Okay, so that is one space you're looking at. Devang, EMS, I'm just talking about themes that could just not go wrong before we got into this correction, right? People were looking to buy into EMS stocks at any price, and valuation multiples went to 90 times, 100 times. Where do you stand on this now after the correction?
I think we are not probably nibbled into any of this EMS stocks. There are a lot of proxy plays via which we played it. So honestly, there are what would be required if the EMS companies thrives. There would be semiconductors which will be required. There will be air compressors which will be required. I think power automation. I think a lot of such businesses would be required once India goes into the curve. Companies like which are into the HVDC, high voltage direct current and will. And I used to talk about Hitachi Energy, which again has come with a 500% EPS jump. So most of these companies have delivered good numbers. I talk about air compressors, the companies like Ingersoll Rand, which again came up with good set of numbers. But again, yes, markets have sort of punished the businesses which have come up with even good set of numbers. So I think rather than playing the EMS, I would also play the last mile proxy in terms of if there is networks to be established, if there are warehouses to be done, if there is EMS to be happening in India, if there are a lot of big plans that are going to come to India, I think what would be required. And here I can be very vocal in saying that there are no large cap businesses available in this universe, because if you want to sort of buy large caps, I think 60 to 70% of the universe would be IT, financial services, as well as your FMCG. And oil and gas. These are companies which will be available out of the index, maybe out of Nifty 50 or out of Nifty 100. So I think a lot of mid and small size businesses which have corrected here should probably be looked into. As I said, probably if somebody don't has the confidence, you can probably do it in the couple of tranches or 3 tranches in the next 2-3 months.
Thank you very much for that. We will slip into a break. On the other side, we'll discuss market technicals with Soni Patnaik from JM Financial Services.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.